And Professor of Economics at Delhi School of Economics, as well as Chairperson Research Council and Dean Academic Activities and Project, University of Delhi. She is currently a member of the Monetary Policy Committee of the Reserve Bank of India. She is affiliated with the Economic Cycle Research Institute, New York, and has formerly served as the head of the Department of Economics at Delhi School of Economics and as the president of Indian Econometric Society. She has served on RBI and ADB advisory groups, besides being the principal coordinator from India of the United Nations World Project LINK. She has supervised more than 30 MPhil dissertations and around 14 PhD theses. I request Dr. Dua to share her valuable views on the topic.
Mr. Shishir Jaipuria, Dr. Mahapatra, Mr. Nanda, Professor Pandey, esteemed faculty of the Jaipuria School of Business, distinguished guests, and dear students. It is my great pleasure and honor to be here today, and I thank the Jaipuria School of Business for giving me this opportunity to interact with all of you on a very current and relevant topic. As all of you are aware, the strategy of financial inclusion is not new. It has, in fact, been a basic agenda item of the Government of India and the Reserve Bank of India for almost 5 decades. However, it started to gain immense global prominence during the early 2000s due to the efforts of the United Nations and the World Bank, and now more recently by the efforts of the government through the Pradhan Mantri Jan Dhan Yojana program. Some government policies like nationalization of banks, priority sector lending, setting up of regional rural banks, and encouragement to cooperatives date back to 1960s and 70s, underlining the fact that inclusive finance was always a national priority. In fact, the financial inclusion policy introduced by the Reserve Bank of India in the year 2005 aimed at 100% financial inclusion. Before I discuss other points, I look at the meaning of financial inclusion. Essentially, financial inclusion means that poor people and small businesses, mainly in the remote and rural areas, have access to basic, useful and affordable financial products and services to address their financial needs, such as savings bank accounts, receipts, payments, credit, insurance, etc., all delivered to them in a simple and effective manner. The expectations from the financial system are principally ease of access, security and safety of deposits, low transaction costs, convenient operating time, minimum paperwork, availing quick and easy access to credit and other products, including remittances suitable to their income streams and consumption patterns. The provision of simple, small and affordable products can help bring low-income families into the formal financial sector. Low-income households in the informal or subsistence economy often have to borrow funds from friends, family or money lenders. Loans or savings can help them to accelerate consumption, absorb unforeseen shocks such as health-related issues, make household investment in durable goods, home improvements or education of children. In this context, the government and the Reserve Bank of India have been taking a multi-pronged approach in the direction of helping small and medium enterprises, the unorganized sector, the poor, and remote and unserved areas of the country through technology, new business practices, and new organizational structures so as to provide access to the formal banking channels for the purpose of both deposits as well as credit. At the global level, India stands out as one of the few emerging market developing economies where the government has a documented financial inclusion strategy that contains specific commitments. The Pradhan Mantri Jan Dhan Yojana program that I mentioned earlier is one of the world's largest financial inclusion initiatives to date that promotes no-frills bank accounts. It was launched in 2014 and is a prominent example of India's national level commitment to advancing financial inclusion. As per the 2016 Brookings Financial and Digital Inclusion Project Report on advancing equitable financial ecosystems, countries like Philippines, Peru, and Colombia have only now formalized their commitments towards financial inclusion, and a big part of the recent progress in financial inclusion in these countries is due to this formal setting of inclusion targets. Countries such as the US have started to recognize the impediments to using financial services in the form of expensive minimum balance requirements. Increasing consideration is now being given to the promotion of an inclusive financial ecosystem by development of regulations to limit the costs associated with access to credit among low-income populations in the US. It is also noteworthy that the scope of financial inclusion has expanded tremendously. Traditionally, financial inclusion was associated with expansion in as yet unbanked areas of the country and opening up of new branches and accounts. However, financial inclusion now also encompasses access to better financial services across the country, especially with the deployment of technology in digitized format, which I will talk about later. Some of the other recent important measures towards facilitating greater financial inclusion in India include setting up of Financial Inclusion Advisory Committee to prepare a national strategy for financial inclusion, issuing of licenses to payments banks and small banks for furthering financial inclusion, revised priority sector lending guidelines, streamlining lending policy to MSE sector, provision of no-frill accounts, basic savings bank deposit accounts, business correspondents and business facilitators, relaxation on Know Your Customer (KYC) norms, opening of banking services in unbanked villages with population more than 2,000 as well as less than 2,000. Direct benefit transfer to Aadhaar-seeded bank accounts, and financial literacy through collaborative efforts of banks, NGOs, and civil societies. It is obvious that in a country with the length and breadth of India, opening physical branches in every nook and corner endlessly in a mammoth exercise, and therefore the focus is increasingly on access via technology adaptation in the form of opening up of electronic accounts and emphasizing e-banking. Besides supply side factors, demand side aspects of financial inclusion have also played a major role. Up to 5th April 2017, banks have opened 28.23 crore number of bank accounts under the thrust from RBI and the Prime Minister Jan Dhan Yojana, which was launched, as I said, in August 2014. Hence, it is the right time to focus on the demand side, which is to focus on enhancing capabilities so that individuals are in a position to not merely avail the offered services but are also capable of demanding preferred products and services suitable to their needs and choices. It is generally believed that unless the demand side measures adequately supplement the supply side measures, the goal of financial inclusion would remain largely elusive. In this direction, creating adequate general awareness through financial education and literacy and direct benefit transfer to Aadhaar-seeded bank accounts are important drivers for enhancing the demand side of financial inclusion and is potentially a game changer. If entitlements under various government-sponsored schemes start directly flowing into the bank accounts of individuals under direct benefit transfer mode, it can act as a catalyst to encourage savings habit, leading to build-up of investment and seed capital for availing productive credit. The inclusion of digital financial technology, especially in the recent past, post-demonetization, for the spread of financial inclusion also merits some mention here. Digital financial technology, or fintech, and particularly the global spread of mobile phones, has facilitated expanding access to financial services to hard-to-reach populations and small businesses at low cost and risk. Some examples are digital IDs make it easier than ever before to open an account. Digitization of cash payments is introducing more people to transaction accounts. Mobile-based financial services bring convenient access even to remote areas, and greater availability of customer data allows providers to design digital financial products that better fit the needs of the unbanked individuals. As you are aware from today's headlines in the newspaper, only yesterday we had the Honorable Prime Minister launch the Bhim Aadhaar platform for cashless payments. Such high-profile initiatives driven from the very top are aimed at driving financial inclusion in a big way. In fact, taking benefit of technology, as in this case, allows for quick progress, such as the bypassing of the need for bank branches to conduct financial transactions. Experience of countries across the globe have brought to the fore certain impediments regarding implementation measures promoting financial inclusion. Thus, conscious steps have to be taken to ensure the spread of financial inclusion. Some of these are: ensure financial access and services are extended to hard-to-reach populations, including women and the rural poor. Increase citizens' financial literacy and capability so they understand different financial services and products. Make sure everyone has valid identification documents and a low-cost, accessible means for them to be authenticated. Devise useful and relevant financial products tailored to consumer needs. Establish robust financial consumer protection frameworks and adapt relevant regulatory and supervisory authorities, including by utilizing technology to improve supervision, so-called RegTech. Finally, it is important to mention how India stands committed to the cause of financial inclusion from the pilot project on financial literacy announced earlier this month by the Reserve Bank of India to set up Centers for Financial Literacy, CFL. The Reserve Bank is initiating a pilot project on financial literacy at the block level to explore innovative and participatory approaches to financial literacy. The pilot project will be commissioned in 9 states across 80 blocks by non-government organizations in collaboration with the sponsor banks. The pilot project would be executed with the following broad objectives: active saving and good borrowing, financial planning and goal setting, and going digital and consumer protection. The CFLs will be set up under a common name and logo, Money-Wise Center for Financial Literacy. The sponsor banks will enter into contracts with the identified NGOs within 3 months, that is by June 30th, 2017. Thereafter, the NGOs will start operating the CFLs within 3 months of entering into contracts with banks. To sum up, expanding access of finance to the small, the poor, the unorganized, and the underserved sections of society has been a central tenet of both the Reserve Bank and government's developmental policies. With a view to achieving sustainable and scalable financial inclusion, multiple strategies are being used, such as appropriate relaxations in guidelines, provision of new products, and other supporting measures. Further, the Jan Dhan Aadhaar mobile phones trinity, also known as JAM, provides fertile ground for fintech, that is, convergence of finance and technology to provide financial services by non-financial institutions to further permeate to the last mile. Notwithstanding fintech's manifold benefits, there is also a need to exercise caution in areas such as privacy and ownership of data. A lot has been done so far towards financial inclusion, and a lot needs to be done to accomplish the 100% financial inclusion target in the country. Thank you very much.
Thank you, ma'am, for giving your valuable insights to our esteemed audience. Our guest of honor, Mr. A.N. Nanda, is presently working as Member Postal Services Board in charge of banking and rural business. He is the senior-most member of Postal Services Board, responsible for rollout of core banking solution, rural ICT, and spearheading the formation of India Post Payments Bank. His exposure to both management science and computer application has stood him in good stead. He has implemented CPS, PFMS,